Nvidia is showing strength after the recent rate cut news. But what if I told you there are a few other bullish news impacting Nvidia stock that Nvidia stock investors should know? Like a $100 billion AI investment partnership, or what Microsoft's CTO recently said in a conference about AI. As we will see, building AI infrastructure is expensive. But you know what is not expensive? Hitting that thumbs up and subscribe button. All jokes aside, in today's episode, we will do the following. First, take a closer look at Microsoft's CTO and his bullish thoughts about the AI market. Next, we're going to discuss a recent $100 billion investment to build up AI infrastructure. And finally, we're going to end this episode looking at a new bullish analyst and other AI stocks that they seem to be bullish on outside of Nvidia. So, let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's start off with the CTO at a recent conference. So here we're going to hear about Kevin Scott, who is the current CTO of Microsoft. And on September 10th, he was at the Goldman Sachs Technology Conference. For those that are not familiar with Kevin Scott, outside of being the CTO, he is also the vice president of AI. So this is a person that's very up to date with all the AI technology, with obviously AI infrastructure, with obviously AI updates coming from big players like OpenAI, as they have such a strong partnership with each other. So in kind of this conference, there was a lot of questions from an analyst, and they were focused in obviously a lot of different products with Microsoft, but I'm going to focus on the ones that deal with the AI space. So the analyst was pretty much asking the CTO or Kevin, where are we right now in generative AI? And while Kevin did mention a lot, I think the first line is all we need to know. He mentions that right now, he still thinks we are really early in the relative early innings of AI. So this is something that we have heard from various other industries and other companies, and it just continues to solidify that evidence that the AI market is still in premature levels, that there's obviously a lot more money to be spent. And if there's going to be a lot more money to be spent, if more products are going to be evolved from here, then that could be seen as a huge bullish sign for all the semiconductor companies out there that are designing AI chips. And obviously one of those is Nvidia. Now, he kind of goes on in another question where he talks that right now, the people who are really involved in this new infrastructure can really see that there's still a lot of power yet to be built and a lot of capability to be put in the hands of developers. So again, we continue to see more evidence that, and I think this is going to go with a nice segue of the topic we're going to discuss next. But right now, infrastructure is still, we still need more power. We still need more computational strength. We still need more data centers being built all around the world. And now the final question I want to talk about during this conference was this, the analyst was wondering if we were moving too fast. And what he meant in this question was, are we moving too fast in building AI infrastructure? And Kevin Scott pretty much mentioned that right now, demand for infrastructure has materially outpaced their ability to supply it. And so like they're building at a pace where based on their understanding of where demand is going to be. So this is something that we've heard from Microsoft during earnings and from a lot of these other kind of data center players that right now, the data centers that they are building are just to kind of keep up with demand. It's not like they're building all these AI infrastructures and there's no demand out there. So again, we continue to see that bullish strength about the AI infrastructure market. Now that we heard from the CTO on September 17th, just a few days after, we heard of a new partnership to increase the potential or kind of build the infrastructure needed to fuel AI. So right now, the drive to develop more powerful AI capabilities will require significant infrastructure investment to support it. And on September 17th, BlackRock, Global Infrastructure Partners, Microsoft, and MGX announced a global AI infrastructure investment partnership, GAIIP, to make investments in new and expand data centers to meet growing demand for computing power as well as energy infrastructure to create new sources of power for these facilities. These infrastructure investments will be chiefly in the United States, fueling AI innovation and economic growth, and the remainder will be invested in US partner countries. So first, I want to say this again talks about a few things. We continue to need money to build out this huge AI infrastructure market. We're going to see this is about $100 billion investment potential. And if we heard before that 50% of usually data center spending is GPUs themselves, the other 50% is the actual building of the data center and the kind of building of the power solution. So in theory, based on current numbers, that's at least $50 billion going on GPUs in general. The other thing that we are hearing here is that we're also in a place that power continues to be a bottleneck, as this investment is also focusing on making sure that there's new sources of power for these facilities. This is obviously very bullish in general for the AI market, and obviously the AI market leader right now is NVIDIA. But what makes this more bullish for NVIDIA is NVIDIA will actually support this partnership program, offering its expertise in AI data centers and AI factories to benefit the AI ecosystem. So, I mean, in theory, if you're going to be kind of being a consultant on this huge AI factory, this huge AI data center investment, it's pretty safe to assume that NVIDIA is definitely going to make a nice amount of money from this partnership if they're going to be supporting this overall infrastructure plan. So again, very bullish for NVIDIA, and pretty much great news and more evidence compared to what we just heard as well from the CTO in the previous segment. So the final news is about a bullish analyst for NVIDIA. And let me just say, while I personally don't follow analysts and I just do my own due diligence, I know you guys do, and I just want to share my overall thoughts on this analyst as well. So William Blair initiated coverage of NVIDIA with an outperform rating. The analyst notes that NVIDIA's data center revenue skyrocketed by 217% in fiscal 2024 and is expected to grow by 132% in fiscal year of 2025, reaching over $110 billion. So pretty much what we all know right now, that NVIDIA is going to continue to grow into data center space. The analyst also kind of goes on and talks a little bit about kind of the strengths of NVIDIA. In my opinion, this one is very slow to the game here for NVIDIA. So while it is cool to see a new bullish analyst, it's not something that I'm very excited about, as to me, it seems like something that pretty much anybody out here could have said about NVIDIA. There's nothing crazy that he sees about NVIDIA that maybe we might have missed. However, he does caution risk for NVIDIA, including the exposure to China. And this is, he believes that there's a lot of revenue coming out from China right now. One of that reason is because that's where some of the chips get sent to finish being built out, or some of the systems get sent to finish being built out. But it doesn't necessarily mean that China is the market player there. So to me, that kind of showcases that maybe this analyst doesn't know too much or understand too much about the NVIDIA market. He also believes that the semiconductor is cyclical, which it is, and he believes there is a key man risk with CEO Jensen Huang. Again, all very top overview of thoughts about NVIDIA and nothing too crazy. But outside of NVIDIA, this analyst was also bullish on two other companies. He also gave an outperform rating on Broadcom and ARM Holdings. So Broadcom, because he believes that custom compute will be custom ASIC solutions, does have a place in this market. I do tend to agree with him there, and I think Broadcom is a great player. The third is ARM Holdings, because ARM Holdings has this amazing royalty program. That is one that I personally am gonna go against. I don't think ARM Holdings is a cheap company right now. I think it's pretty overvalued, but that's just my overall thoughts. Right now, I'm looking here at forward 1 year PE ratios for all three players. NVIDIA and Broadcom are sitting pretty close to each other. I personally do enjoy both those companies, even though I only own one. I think NVIDIA is a true AI play, and that's it. It's a true AI play, 100% an AI dependent play. Broadcom, on the other hand, has various growth opportunities and is very kind of diversified where they can grow in the AI space, they can grow in the networking, they can grow in the non-AI networking space as well. So Broadcom is one of those diversified plays that can also grow from AI, but it's not completely dependent on it. And it is sitting at some attractive PE ratios as well. So those two are definitely interesting. ARM Holdings, like I mentioned, is one I personally would stay away from. It doesn't mean the stock is going to tank. It's just one that I personally wouldn't put money in. Let me know in the comments below. Are you buying any of these three stocks? Are you bullish in any of these three stocks?